Ladies and gentlemen, welcome to Cryptopocalypse Now. I'm your host, Crypto Ranger, and in today's video, I'm going to be sharing something that a lot of you have been getting wrong this whole time. Oh, hold on a second. Look at this guy. He's going to tell me what to do, how to trade, how to spend my money, what to spend it on. Yes! I'm going to tell you how to position yourselves in the market right now, looking at Bitcoin's price action. Stay hydrated, never liquidated. You know the rules, and so do I. Once you leave the platoon pad, you'll be a better trader, I guarantee you that. If not, unsubscribe from this channel by the end of this video if it doesn't make you money or make you better. That's the Cryptopocalypse Now guarantee. Who does that?
Thank you for liking, subscribing already. I'm seeing massive inflows of likes. That's very professional of you. I really appreciate it. Now on to the business part of this stream. I've got a DM. That was a question about trading psychology, and I got really motivated by that because it reminded me of my younger days when I thought it was not important. I thought that if I could only learn to see things on the chart, then that's all I needed. But here's the thing. Having a firm grasp on that trading psychology is a very important element here in our group, and I need to be sure that if we move forward with more advanced stuff, that we're all on the same page. And so trading psychology basically means your response to risk. Capiche? Your response to risk. And it's the most important, the single most, not the indicator, not Bybit Pro, not anything. It's the single most important element to successful trading is how you respond to different risk levels as you trade these charts. We're going to talk about how when you're looking at a chart like this, you need to have confidence, build it up, and most importantly, retain it. How to keep that confidence so you can reuse it. You can take certain trades and win, and then there are other trades that you lose. And the losing trades are obviously the ones that shake your confidence, and then you cannot perform and make good trades. So you need confidence, and you need to be in control of your risk. All right. So the concepts that we're going to talk about today, we will outline just a few of them, but just enough to make this be the final video that you need in your life. You won't need anything else. You can then unsubscribe from every other channel in the world. By the way, you cocky sons of censored out there who are like, oh, I've been trading for 15 years. This is for you too, okay? If you've been actively trading for a long period of time, welcome to the club. I know you're out there, and your biggest downfall is that you think you know, but you don't. So we'll talk about a couple of approaches to good risk management and then some. Otherwise, if there's one little tiny screw up, everyone pays the price, and it's hard to recover from that. So it comes down to this, right? You must have a comprehensive game plan. Simple as that. And without a plan, what you're doing is you're flip-flopping. You're changing your mind at the first sign of trouble on the charts. You're making your mind believe the things that are not there. I'll show you how you can use MarketSpy to do real technical analysis. But if you use any other tools, Fibonacci's, Elliott waves, you got your Bollinger Bands, you have your extensions, pitchforks, channels, slopes, chart patterns, candlestick analysis. All that stuff is good. Those tools are not bad. Some of them will work for you, others won't. So I'm not going to dismiss and say everything is garbage out there. It's not. It's just there's no clear method using them. And if you use it like the next guy uses it, then you don't have the most important key element, which is the edge. You want to travel and navigate these murky waters of risk analysis, which we haven't talked about in detail before. Allow me to be your guide on this beautiful journey, your pilgrimage to the land of a profitable trader starts now. So what types of tools do you use to find opportunities? Some of you guys out there are using specific systems like MarketSpy, other stuff that's out there. I don't know what's out there. Retail doesn't have anything that's actually useful. Or you have solid trading tools like moving averages. And we should start by saying that there's no right or wrong way to analyze and trade Bitcoin or any other market for that matter. There's no secret sauce indicator out there. We don't have an indicator, we have a system. There's a difference. If you take 5 different traders right now, put them against the wall here, and you ask them, what do you think of this chart right here on Bitcoin? What do you think? They'll all tell you their views, and they're all good, profitable traders, but they will not agree with one another. They'll be like, LARPing all over the place, right? Fighting for their ego. I'm right. They'll fight. 5 good traders that are very disciplined and everything. But one thing they will all do is that they'll have a method to trade in such a way as to not generate excessive losses. And this is how. So universally, we have certain yes, no, do, and don't in trading, such as do not short into support. Do not long the resistance. Don't trade the chop. Don't trade when moving averages are crossing over. It's a mess, spaghetti. There are universal rules that all professional traders know, and they follow those rules. Rules are designed to keep us out of trouble. They're not designed to be broken. So we need to establish some rules. So I'm getting there. Then these traders, these 5 traders that we put up against the wall, they start trading this chart. They're looking at it and they're saying, okay, this is what I think. This is what some of them will short. Some of them will place bids. Some of them will market buy. Some of them will market sell. Others will measure Fibonacci's and say, I'm going to short the 78 or whatever. They'll do their thing, but they'll have risk in place, good risk management. Each and every one of these professional qualified traders will basically have what's called an edge, something that the trader next to them doesn't have and the trader standing behind him doesn't have. And to find that edge, you have many ways. You can be mentored. You can spend years searching for it. You can build one. You can discover one. You will then need to trade for a couple of years, maybe 3, to back test it. And it's not like TradingView back testing, where you're like, I'm just gonna go back a number of candles and see if this strategy works. No, you'll actually have to sit for 2-3 years and test it. Like it was tested with MarketSpy. You have to go back and compare all the momentum oscillators, all the moving averages, all the crap that's out there to build a system. And that takes time, all right? It does not happen overnight, but that's how you find the edge. And if that edge, or whatever the system that you find, discover, or build, it resonates with you and you consistently apply it and it works, then you have it. That's how you know you have it. So there's fundamental and technical analysis, right? The next point I wanted to make. Now, technical and fundamental analysis is the same thing. All right? I don't care. You cannot argue with me about this. It's the same freaking thing. There are quantum mechanics that are involved here. Fundamental analysis is lagging. Technical analysis is lagging. The market priced everything in already. Only the market knows what is going to happen. Now, some of you guys like looking into technical analysis and using fundamental analysis, right? There's nothing wrong with that. It's just for some traders, using a blended technical/fundamental analysis, the kind of thing they enjoy doing. People who like to move fast through the markets, especially like intraday traders, short-term traders, they would lean on the technical analysis. As fundamentalists would probably not even be concerned about highs, lows, and breakouts and all that stuff. If you're watching news every day and you think that's fundamental analysis, you've already lost your money. That is nothing but noise, including market data that comes from reliable and important sources like the Fed. So the market knows And fundamentals are noise on a day-to-day basis. Technical analysis gives you independence. You're in control of what you do with the information that you have. Fundamental analysis on a day-to-day basis is others feeding garbage into your stream of consciousness that influences your decisions, and that's how you lose money. I'm not going to argue about this. I think in the end, both are the same, but technical analysis is superior because we want to make money tomorrow, now, next trade. So technical analysis is far superior for someone who is an intraday, short-term, daily to weekly chart trader. So maybe 2 weeks max. You don't need to know any fundamentals because you can't even control it. By the time you hear about it, it's already too late. So if that resonates with you, understand what kind of trader you are. And now, ladies and gentlemen, with the blockchains, another form of analysis, which is on-chain data, relatively new. It's quite unique and it doesn't fall into the category of technical or fundamental analysis. It's a hybrid analytical approach to studying the flow of money, and it can support but not lead the moves. The only people who are saying that on-chain data is leading indicator are the ones who have built services around that and are selling it to you. Glassnode, CryptoQuant, hundreds, perhaps thousands of others. Beginners make a mistake where, and not only beginners, actually people who know more tend to make more mistakes. Why? Because they overanalyze. So analysis paralysis is a thing. Keep your shit simple, okay? You overcomplicate, you oversaturate, you add too much color to your analysis. And I'm not talking about visualizations on the chart such as this here. I'm talking about how it's not for us to just sit there and analyze 300 different time frames because all of them will have different information. My suggestion is keep it simple, focus on one time frame, minimize the noise, stick to 1 hour and 4 hours. That's it. Slow down the time by using higher time frames so that you don't have to worry about little fluctuations on 15 or 5-minute time frames. The more you analyze, the more you paralyze. This is why I say you have to realize, not analyze. To look at one thing once, make a decision, trade it, execute, take money and run. So more noise is obviously bad. And the fact is the market is not really noisy. We create a lot of noise because we want to be as accurate as we can be to the point where we overanalyze. And I do this. You do this 100%. Everyone does that. Don't make it complicated and involve different structures of technical analysis. For example, MarketSpy is designed with 5 strategies in mind. People cannot make a decision because they think there's too much information on the chart. There isn't. All you have to do is pick one strategy to go with and stick to it. If it doesn't print, or if you don't see the setup, that means it's simply not there. I guarantee you it. So a system is technically a process of repeating something over and over again for consistency. That's what gives you confidence with a good system. But you have to act on the information that you're provided with. It will always deliver if you let it, if you follow through. The setup is always there. So technical analysis paralysis is a thing that most traders go through because they sift through so much information. PA is not enough, but the more forms of analysis you involve is what I'm trying to say. Is the more complicated it gets, and the more complicated it gets, the more likely you're going to suffer from the back and forth, and eventually that kills your confidence. And we want to build up confidence here. If you're overwhelmed, right? If you have too much information to deal with, you will not make that trade. Simple as that. With our system here, my job is to simplify things for you. What is the strategy here? Some of you are posting P&L results that are positive, some of them are negative, others are just on the sidelines. That has to do with risk appetite, because you and I were hungry at different levels. Your risk appetite is different. We have traders that are willing to produce 10% of their accounts daily. They're willing to risk that much. I don't have those kind of cojones, but they do. They put 20, 10% yield daily. But all I know is that the losses would equal those same digits. The math is very simple. There's nobody out there in our Discord, in your Discord, in somebody else's Discord that goes for 20% on the account daily without suffering losses up to 50, 60, 40%. You can lie to me, just don't lie to yourself. There will always be that issue, but how we get there is different, right? And how we execute our trades is different. Everyone knows the market is bullish, but some of us choose to wait in the shadows at the support over here. Others are not waiting at all. They're pushing the market, they're buying it, they're throwing it over the edge. But everyone knows that we had a volume breakout, we had a structure, and we use the same information mostly. We have the same channels laid out. You have a channel, I have a channel, we have a breakout. We're both looking at the same thing, right? So you will trade the breakout. Others would just wait and buy the dips later, and others will trade range bound when it's consolidated like this. So how we get there is a little different, and that depends on how hungry are you for that trade. What's your risk appetite? So every trade should have a plan behind it. If you don't have a plan, obviously you already know this, you're gonna suffer losses. Every time you get in, what's your reason to go long right now, for example, right? That's the number one question. By asking questions, we arrive at answers that clarify things for us, clear the fog in the mind. Yeah, what's the reason for you to go long right now? If you're seeing like this breakout, right? Where will you exit if you're wrong? You have to realize where the stop loss here is in this range specifically. If it's a breakout, there's got to be a stop loss nearby somewhere. And if you're right and you're long, what's your exit strategy? So I'm asking the same question here again, is what is your entry? Alessio Rastani, you're talking about this, that. I watched some of his videos. How do you trade it? What's your entry? They always seem to have entry somewhere over here. Somehow they have an entry and they're just holding on to it. Yet they're making videos about day trading like they're looking for an entry and exit every day. And they're selling you this junk. So that is wrong. That is I'm uncomfortable with that. All right. The justice will be served. So successful trading, they say, requires consistency. You have to stick with your analysis and strategies. Consistency simply means using just one strategy, one simple thing at a time on the chart. In our case, MarketSpy can be that thing. That's it. I'm not doing anything else. I'm not bringing in external factors here. I'm telling you to cut out all the noise that you have in your trading and just stick to something that has been proven to work, something that works for you. Consistency is what builds confidence. When you're seeing the same thing, jackrabbits, pyramids, when you see that thing, why not just long it? Why not just long it in this breakout? Because you want to size up. Sometimes a pyramid fails, and that's where you're terrified of. By looking at indicators, you're thinking if it crosses over here, then it'll influence the price. No, the price influences the indicator. Price is leading, indicator responds. There's a pattern on the indicator that we can take advantage of and take a look at some of the recurring patterns that we can trade. And that's it. That's your consistency. So in addition to things like patience, it's important to trade with a small size until you're fully confident. You will have way more winners with small size than losers because your head is clear. You don't really care. Smaller size will always be the best starting point for any trader. And that brings us down to capital preservation. To preserve what we have is the number one priority. To make gains is secondary. Focus on the process and not the result, not the gain. The results don't really matter. The process is very important. And if you embrace it, then suddenly you're not a losing trader. Few people can do that. Most others are just gambling. So time frame. What time frame are you comfortable trading? Another element that adds to your I can do this mentality. You need to understand, as a beginner, you will be overwhelmed, like I said, with many time frames to focus on. We have 4 and 1 hour, right? And then the 5 and the 15 minute. Mostly you find the scalpers on 15 and the 5, and then you find the intraday guys they don't mind. Maybe they have jobs. They're willing to wait a little bit. They open the session in the morning, close it by mid-noon, something like that. So between 1 and 4 hours is generally a good classic time frame. Which one do you prefer? Some people like 45. They get really exotic. Yeah. So you have a day job and you're like, I don't have a lot of time, so I'm gonna drop down to 15-minute time frame, and that's where I'll work. That's actually a big mistake. If you have a job and you don't have the time, you should switch over to bigger time frames for consistency, all right? Because that's going to slow down the market. Look how fast things are moving here. It's exhausting. Looking at multiple time frames for opportunities is a good way to identify larger themes for your trade setup. You don't bring in every other time frame to your analysis, because that is screwing with your consistency. All right, that is screwing with your confidence, and you're doing this to yourself. Low on time, bigger the time frame. Have all the time in the world, drop down to 5:15, but don't add other time frames. Just keep a daily time frame in your mind and understand what the trend is, and trade those lower time frames using your system. Another thing, what markets do you focus on? I see a lot of people in our forum, Discord, focusing on finding so many opportunities across so many different markets. Some of you guys are trading Forex. You're out there on Wall Street bets, grinding options. Some of you guys are like looking to trade stonks, and you're keeping an eye on Bitcoin. How do you process all this? I don't know. You're doing it wrong. Every market has a personality and nuance of how it trades. I don't believe for a second that if you pull this thing down over here and it shows you have 5 different positions, you cannot keep track of those positions. If you have 5 different positions and you're like, they're all small risk, all those positions are effectively now spelling trouble for you, because it means you have one large position open at any given time. If you noticed, I'm trading exclusively Bitcoin. All right, it was FX before that. The reason I'm not focused on alts, FX, stonks is because I'm not hungry for trades. Bitcoin gives me everything that I need. I have precisely 2 accounts and a couple of other that I manage on behalf of other people. This pretty much gives me everything. And when they regulate this thing and you have more access, more inflow of funds coming in, it'll be more interesting then. Why do you need 1,000 different positions? All these shit coins and altcoins on leverage. That means you're hungry for trades and you don't really know exactly what you're looking for. Focusing on something singular is going to help you mentally, because it's not as exhausting and daunting. 3, 5 at the same time, even for the experienced traders, that's an overkill. So now you have a game plan, you found the right tools, you're confident because you're looking at a single time frame, you're trading the instrument of your love, Bitcoin, you're following Cryptopocalypse now, and your chances of getting that trade is good. And there's also a time to not trade the market, to go fishing, right? Sometimes you just have to do that. No one's forcing you to trade. And if you don't, you're not gonna miss on a big move or anything like that. This thing is gonna collapse soon. Yeah, we're going to all-time high, but it's not a straight line. We're gonna have a pullback and y'all gonna shit your pants when that happens. So how much capital do you trade with will depend on who you are and what your sources of income is. Basically your financial situation, right? If you know in advance what you're comfortable losing first, then you will basically trade better than 99% of all other traders, period. If you know in advance that this is what it takes, this is how much you're willing and going to lose, and you accept it before it happens, not when it's happening, not when it's dropping to a level of your stop. You're like, no, I wasn't counting on this. Not when it's about to liquidate, you're like, oh, stop. You start adding to your margin, you start moving your stop losses, doing silly things. But if you know that in advance, you don't really care what happens, because you aim for consistency and you're enjoying the process. You're not worried about the result. The result moves people, emotionally weak people that fall victim to this mentality of, we'll deal with the problem later if it becomes a problem. No, you have to actually accept that the problem is real. It's going to happen. And you have to determine in dollar amount how much you're going to pay for that mistake. That trade you're about to enter, how much can it cost you? How much is it going to bother you? So that's very important. This will help you keep your mind at ease at all times and allow you to focus on making good decisions and making good calls on the chart for yourself. So how much you will risk on each trade is a must know information. So when you're deciding this, assume that there will be a time that you will have a string of losing trades, right? Not just one, but if you're a typical trader that uses typical tools without a specific edge, you will have a string of losses. It's a drawdown. That's what's called a drawdown. So you experience the drawdown, and if you have 7, 8, 9 losing trades in a row, can you accept the accumulation of these losses? Can you stay with it and say, you know what? I'm cool. That's okay. 5, 10 different losing trades, I'll be fine. Can you recover from that, come back and re-up? Can you add to your margin and add to your account if you lose it? So if you accept this worst possible outcome beforehand, this will help you risk manage so much better than the majority. When we all go to sleep and close our eyes, we're reminded of who we are, what we do, and what this life is all about. I don't really care about anyone's attention. I'm telling you that if you don't keep this risk profile very low, you shouldn't be trading. All right? If you think trading a few $100s is fun a day and that's all you can trade, then congratulations, you're on your way. And you're going to become, you're a willing trader already, but you will become a successful long-term trader who will stand in profit. You may not have a single profitable trade all year, and then bazam, you will have that one trade that's going to make it be all worth it. It was all worth it for just one trade over there. Next thing in risk is opportunities. Remember when we talked about the good risk to reward ratios? Now here's the thing. Every trader would tell you that you should seek out trades that have good risk to reward ratio. The only thing is, on this breakout, we don't really know what the good risk to reward ratio is, and that stop loss is likely to get hit anyways. So right off the bat, if you strive for a good risk reward opportunity, you reduce the percentage of the time you need to be right. You understand that? If you're trading and you want to achieve a ratio of 2 to 1, 1 to 2, you only need to be 30% right most of the time to achieve break even. But a trader that's using low risk reward ratio of say 1 to 1 has to be 50% right. So if you're doing quick scalps, you have to be very precise. You have to know what you're doing. Looking for that one setup that will yield at least a decent 2 to 1 profitable risk to reward ratio could be worthwhile, which again adds to your consistency, where you say, I will not trade anything that is less than 2 to 1. All right? Is this 2 to 1? If you put your stop loss right here, right now, and this thing extends this breakout and goes to here as the first take profit target, and your entry is now here, is this a good 2 to 1 risk to reward ratio? Am I gonna trade this now or not? So your long position, your take profit is right here, right? And your stop loss is right here. This is why people lose money on breakouts. This is your risk to reward ratio. The rest of it, oh, what about the poles? Yeah, the pole. All right, let's move it up. Here's the pole. Risk to reward ratio is 1.45. You know, it's getting there. But do you know it's going to go here? Do you know it's going to go to 61 tonight, right now? No. So seek out the risk to reward ratio setup where the bigger it is, the less right you need to be. The smaller the risk to reward ratio, you have to be razor sharp, shinobi, precise. Move to move. Scalpers lose money quicker than swing traders. Swing trading is more difficult than scalping. Go figure. Why? So it's contradictory. But you have to choose the lesser evil of the two. So if you seek out more fruitful opportunities on a risk-adjusted basis, you will levitate above the rest, and that pressure of being right is gone. You don't need to be right. You just need to make money. That's all you need to worry about. So a good question to ask yourself, in my opinion, prior to entering any trade setup is, can I accept the loss? Bybit Pro can help you with that function, and it can tell you what your loss is going to be. So there are no surprises. No, oh, I didn't know I was going to lose this much. You predetermine that in advance and you roll with the ball. That's it. Very easy. Most people don't do it. I don't know why. But nobody asks themselves, do I want to lose this much? And if so, why not take the trade? So we spend time over analyzing, where is my entry here? Because you want to go all in. You want to bet the farm, and that's why you're not making that trade. You have the setup on the world's greatest indicator that signals long, and you're thinking twice about it. Even though you've seen it happen again and again, it's a positive signal. That thing is telling you, go on, your algorithm is working, but you have zero confidence. Why? Because you're not respecting risk, and deep inside you know it. So ask yourself one question. Are you ready to take that loss? If the answer is yes, it is likely that you're taking a trade which fits your game plan. You're on the right track. If the answer is no, you shouldn't be trading that setup. There's no 2x, 3x. I'm feeling confident this time around. This filters out effectively in the end. This filters out all the bad trades. Remember that a good trade, right? Chat, a good trade can be unprofitable. And a bad trade can be profitable. So when I say good or bad, we're not talking about bad as in, oh, it's negative. We're talking like a bad trade. For example, if you're not long already, getting in long here is a bad trade. Getting in here, when we call the bottom, is a good trade, right? Exiting that is your decision. Some of you are out, some of you are still holding. I don't know. That's a whole different game altogether, right? But getting in here is a bad long. Getting in when it was falling is a good long. Starting to accumulate into a short here is a good call. And the profitability, the return on that trade is not what measures good or bad trade. So time frames, risk, your appetite, agreeing to your losses before they happen, finding the edge, refining it, obviously practicing good trading hygiene, cutting your losses, not letting them run, and focusing on the process and not the results. These are the things that are going to turn you pro overnight, but you have to stick it in your head and practice that daily, right? So the hardest thing here would be not thinking about the outcome, not thinking about the money, because the reason why we got into trading is to make some money. So it's really hard not to think about the outcome, right? So what can I say? Understand your reasons and logic for entering a trade and agree to the losses beforehand. All right, if it fits your trading plan, you agree to the losses, you calculate the size, put a stop, and let it run. That's it. There's nothing complicated about this. Do technical analysis, back it with fundamentals, don't oversaturate, and you should be good. Honestly, these are very simple things that you can do today to actually increase your profitability factor, okay? And then we have advanced things that we have talked about in the boot camps, where things like stop loss becomes a very traditional, unnecessary most of the time thing. I'm not going to talk about it. Some people think I'm insane, but there's a reason. There's a reason that I am so not sympathetic with stop losses. I just, no remorse for the exchange and their practices. But anyways, you should use stop losses obviously as much as you can. For me, I use them to calculate my risk parameter. I need to understand how much I'm putting on per trade, and without a stop loss, it's impossible to do. Am I actually going to have it there? No. My hand and discipline is so good that I'll cut the loss without thinking twice, like a robot, emotionless. But I'm not gonna let it wick me, take me out just to go back to stick with my plan. I know where my exit area is approximately, and I never risk more than I'm willing to lose. I'm always ready to accept the loss on a trade, and I recommend you do the same. The risk associated with it and the overall impact of that loss on my account recovery time that's needed to go back to break even. All of that has to be predetermined. And beginners wondering, what is a trading plan? That is your trading plan. Answer these three things to yourself. Does the risk to reward ratio look good? Do I have the time? That will determine your time frame. And do I have exit and entry targets within reach that would allow for this to be a worthwhile trade without spending an insane amount of time babysitting it? Answer yes to all these questions, and that's your good trade. It can be a loser, but it will be a good trade. All right. And you will have bad trades. Most of your bad trades are actually winners, where you're just blindly breakout market button, right? It's just like rockets through the ionosphere, and somehow you're in profit and you don't even know how you got there. You're like, oh, that was nice, but there was no plan backing it, so that's not a good trade. That is not going to give you consistency. That's a one-off event, and the next trade of the same kind is going to be you stepping on a mine and giving it all back to the market. The market knows you just punted it. The market knows you got lucky. The market saw how much you put in and is going to take it back. I guarantee you that. I was guaranteed that. I was like, whatever. Watching these videos is great and all, but keep a journal and record your behavior. Study yourself, because you are the key. And if you want good, consistent results, you will stick with the plan, stick to the rules. And for MarketSpy traders, trust your system. Use the edge that most others don't have, and be on your way. Be a better trader than most. If you have found your own edge, hopefully this video serves a good reminder to what you may have forgotten about while being a top 10 trader in the world. Can I follow you on Twitter? Do you do daily chart updates and share with the world your alpha? You have courses too? Sign me up. Handling a drawdown and handling your successes and victories. A drawdown is defined as a natural and unavoidable part of trading where you incur losses. Your job here at Cryptopocalypse Now is to make sure that you go through normal drawdowns and that they don't become damaging, excessive drawdowns. There's two types. The shadow damage drawdown is where you not only pay the price by losing a significant trading capital holding on to a loser, but also you pay with mental capital, again, taking away from your confidence that we're trying to build here. So the faster you recognize you're not trading well, or that your style of trading is not conducive for the current market environment, the quicker you can limit the damage and get out of your losing trade as fast as you can. You have to make that cold emotional decision before that normal drawdown turns into something horrible. So stop the losses manually or with a predetermined exit, right? And you got to take a break from trading for a few days, sometimes weeks, or even for some months. Therapy. The market will be in the exact same location. Just another chart setup at a different price level. Doesn't really matter. Same rules, same routine, same discipline. So it's not like you're going to be missing out. That's one way to kill FOMO, is to understand that the market is not here to compete with you and outrun you, outrace you. Don't worry, you'll catch up. It doesn't change, ever. There's no, oh, we traded this breakout. Oh, look at us, we shorted the top. There's no such thing. There's always a setup every day. If you trade like what we have been showing and trading inside of our Discord, then you know there's always a setup. It's not competing with you. It doesn't really care. So when you step away, you will feel better immediately because you're not surrounded by this garbage nonsense here. The tweets, CR streaming, talking all that madness, right? The charts that make you want to vomit just by looking at them after that loss. I know the feeling. Everyone knows the feeling. Don't deny it. So you need time to clear your head and start figuring out why you perform poorly. And if it was because you missed this video, that's on you. All right. Or if you didn't pay attention and say, yeah, whatever, I'll do it my way, that's on you. If you're making a lot of silly mistakes by breaking your rules or not having a rule-based system to begin with, that's on you. What about the market conditions? The market is never perfectly fitted to your style of trading. There's a time to be a bull, to be a bear, and there's a time to go fishing. You already know that. So don't make any silly mistakes and force the chart on yourself. If you're not seeing it, if you're drawing these lines, you're doing the slope analysis, you're doing the trend line analysis, if it doesn't fit, just step away from it. Go read a book or something. Huh? I don't know. But don't force it. Don't force it. The market will not appreciate it. So if the conditions are not suited to your trading style, and in the beginning of this video, I told you, you have to figure out what kind of trader are you. Do you have the time to be a scalper, fast-paced, in and out kind of guy or gal? Or are you more of a busy person and maybe you should focus on a 4-hour time frame? Look at the daily trend and just swing it and hold it if you have to. Some traders will perform when the market is in a strong uptrend or downtrend. Others will participate in the range. Our indicator, Armageddon, for example, right? It knows ranges like no other. So we can make money within a range. But for most other people, ranges is where they give it all back. So there are other situations outside of trading which can affect your ability to make good decisions. For example, a fight with your spouse or something. I don't know. Your kids driving you up the wall. Your dog. Whatever. Your best friend trying to get you to buy into Cardano before it hits $3. Your notifications from Carl the Moon. All these things are in your way and they can affect your trading. All right. You're not thinking straight if that is the case. So you want to try to get to the bottom of those things and don't compound your problems. Compound your gains together with us, but not your problems. Please stay clear-headed and give yourself some space away from the market sometimes. So knowing how to handle your drawdowns is very important. But then you also get in and you get a good trade. And now you're like, it's time to celebrate, pop open the champagne bottles. And how can you handle good times and stay humble? It's just as important as you handling your drawdowns. You're doing well. You're prone to becoming overconfident. Now, Bybit Pro, MarketSpy can induce that. We had a trader who was all over the Egyptian pyramids, a setup on our indicator that shows you a favorable reversal. Allow me to demonstrate on 1 hour. You will see little pyramids right now inside of this range that were indicating a long position for those that were taking them. Do you see? These are long position entries on our indicator. So these pyramids, our traders like, you can't imagine how much I love those pyramids right now. When the bull market ended, they became less effective because the downward pressure, sell-off pressure was a little high, and that trader did not adjust to the holding period that was required. So they got overly confident with the system. What I'm saying is you have to handle your successes and always be taking profits with grace and humility. Say thank you for what I've been given today. Be humble about it and take what the market gives you. Don't hold it when you're in profit thinking that you deserve more. Getting too excited, overconfident. And Bybit Pro is the second element outside of MarketSpy that can induce that same confidence. When you're using the chaser, for example, you're like, oh, I figured it out. I can just keep buying and selling all day. Oh, the market maker, I can just position a ladder from both sides and take advantage of price volatility. Oh, it's impossible to lose. We need to tame our emotions a little bit and say that, okay, it works, but let's not overdo it. Very important how we handle our successes as well. Don't become overconfident because you will get sloppy in the process. If you don't humble yourself, the market will. The market will do that for you. You have to keep yourself in check. That's why all those guys that we watch on YouTube talking Lambos and this and that and the moon. They lack humility, and I know the market takes it all back from them. All right, believe me, that's how it works. That's how it's always been. Now, if you're doing well, extremely well, with the things that you have been learning, you have to ask yourself, am I performing well because I'm trading well, or only because the market environment is highly favorable? Meaning, if it's a bull market, anyone can make money. Every idiot and their grandmother can just press a long market button and most likely come out in profit. Am I performing well because I have the shit in my hands? A strategy, an edge, something that works. I have been a good student of the craft. Or is it because we're in a bull market where all the bulls only know that there's hay at the top of the stairs, and when the party ends, am I going to be the same profitable trader, or am I going to join the 90% of losers that will give it all back? All 6 months of an uptrend, I'm just going to give it all back because I refuse to take profits, because I got overly confident. When the market is behaving like an irrational little capricious baby that just doesn't know what it wants, all indicators will crap out. Systems, models will not perform. They will need to be adjusted. Your own golden strategy will fail you because you're conditioned to buy every dip until it doesn't work anymore. Are we performing well because we're trading and managing our capital well, or is it because the market is just favorable? I think it's the latter most of the time. So profitability and the results, they can mask your mistakes. You're making them, but you're not seeing it because the market is bullish. Right now, everyone is bullish, and understandably, I can see why. But nothing lasts forever, and there will come a time when it will be the last flag, the last breakout. Be careful out there. Understand that if it feels like being a genius is a simple matter of smashing the long button, then that's not going to last. And there will come a time where we will have to give it all back. That's why journaling things, remembering what happened and how you reacted specifically during the process, is going to help you understand. Remember, the bad trades are going to be profitable sometimes, and the good trades are going to be negative. Okay? Most traders say, oh, that was a bad trade, I lost money. No, that was a good trade according to the setup and everything, but you lost money. We're talking about consistency. We're focused on the process and not the outcome. By managing the process, holding ourselves accountable, approaching this with rationality and regularity, where we can replicate the process, we achieve consistency. Consistency gives us confidence. Confidence makes us execute trades. Humility allows us to take profits and not ask for more. And it's a whole thing here, right? If you have any questions, always please DM me if you're struggling with any of these points. If you're trying to understand what it is that's missing in your system, maybe we can dig through and discover that secret ingredient that you need. And don't worry, I'm not going to share my methods or something. We'll just evaluate what it is that you need as a trader, in my opinion, and maybe that helps. Free shrink service. I've said it before, and I said it a few times before that too. Trading as a business, like any other business, is not easy. But if you have a plan, like a business plan with your trade setups, covering risk, you will increase your levels of confidence doing things this way. The sheep, they'll just continue to do what they have been doing, and they will never learn. So here's your chance to turn it all around and trade proper, sound ideas together with the rest of us here at Cryptopocalypse. Now, welcome to the channel, and I feel sorry for you if you skipped this video and you thought it was too long and not worth your time. Good luck to you, sir. For the rest of you, thank you for watching.
Yeah, finally, holy fuck.
Alright, I've been waiting for this moment all my life.
That's a lie.
No, seriously.
Whatever. See our charts now.
Let's take a moment to hydrate.
And never liquidate.
I just wanted to say, I was looking at these channels like the moon and all that. I couldn't understand what made them so popular. And then I figured it out finally. They have nothing but suckers subscribe to their channel. Beginners, vulnerable people who are going to lose money on day one. Contracts with exchanges. And all I want to say is that you guys are amazing. What we have here is real people, real traders, real consistency, real good community, and I freaking love it. I understand now that we actually edge out above the rest. And it's not about the numbers, because that shit is fake, just like their trades. But you folks here at Cryptopocalypse Now, beautiful souls. Such an amazing community. Everything else out there is just, it's so trash that I will never ever bring it up ever again. I'm done with it. It's ridiculous. You guys are awesome. Thank you for being here. Stay hydrated, never liquidated.
Ladies and gentlemen, thank you for watching the greatest stream in the history of all of YouTube. Cryptopocalypse Now loves you too and wishes you happy trading days ahead. Subscribe and tell your uncle about this channel. Be long and be strong. Behave and be safe. Most importantly,